Good morning, this is Steve O'Hare and welcome to Talking Bull. I'm on my own today, so you'll have to bear with me with all the technical stuff that Joe normally handles. Let's see if we can make this work. First of all, I'll run through the all of the sort of like news overnight. We had a bit of a rocky day yesterday, especially for the cryptocurrency lovers out there. They had a bit of a horror show at one point with many of the cryptos dropping almost 50%, if not more. Although they did recover. We'll go through the charts on that. The Asian market appeared to have brushed aside much of the fear evident throughout the US and European session. So there has been a bit of a recovery there, it feels like it was led by the US yesterday and went into the Asian session. The Fed did little to help the sentiment overnight with minutes showing that members are raising the topic of tapering as something which should be addressed in the coming meetings. So they're looking at the obviously the interest rates as well. That's a big topic. Looking ahead to ECB's Lagarde later and US jobless claims provide two areas of focus. So initially, what we will do is we'll hop into the charts and I'll run through, let's see if I can add my chart like this. Aren't I a clever boy? Joe will be proud. I'll run through the Forex first and then we'll go down to the cryptos, the commodities and the indices. On purpose, I haven't really sort of like, Joe normally takes a look at the Forex, but I sort of like left everything as it was from the last time I went through this, and so it gives me a time to sort of like do some live analysis. Really for me, starting with the weekly chart is always where I start when I analyze a market from a fresh perspective, and we can see that we have euro dollar with the dollar weakness recently. Euro dollar has perked up a bit, and the weekly chart is showing this impulsive move higher, although if we look at Elliott wave, it feels like we have played out, we're sort of put the impulsive wave in place. This is a typical Elliott wave. We have wave 1 higher, wave 2 correction, wave 3 higher, wave 5 correction, before we then get an ABC correction. The ABC correction normally plays out with leg A and leg C being of similar size and amplitude. So really for us, I think that we are nearing the top. We've obviously got this downward trending resistance line. We'll have this horizontal resistance. Let's turn them red so it makes sense to everyone and looks a lot more scary. So yeah, that's the sort of formation for me euro dollar will be playing out. So this obviously brings into question what is going on in the dollar index, and it's a bit of a scary looking chart in the dollar index overall. We've got this support which comes in. There's a potential upward trending support line. Let's make it blue. This brings in support around about the 89.33 level. We have been down to 89.69 and corrected higher from here. So a little bit of a reprieve from a dollar perspective, and that's where you see the euro dollar doing the opposite and looking to correct further. In dollar index, we've had this Elliott wave, 1, 2, 3, 4 corrective wave, 5th wave lower, and we're getting this correction now. So really the levels of resistance really that sort of like strike a chord at the moment are way up at 93.43, and we're a long way from that. So also look at cable. Cable has had a great time recently from the low of the pandemics, and we've just continued higher, and we're sort of like, we've seen levels that we haven't seen since 2018. So cable looking very positive in this bullish channel higher. Let's take away that. And although we had a bearish engulfing day yesterday, that's put us on the back foot slightly. That's just the recovery in the dollar. Dollar Swiss pre-drawn, obviously this impulsive wave higher then normally leads to a correction, and we are getting quite a sustained correction here in dollar Swiss. This really highlights the weakness in the dollar, the Swiss being a very neutral currency. And yeah, yesterday we saw a bullish engulfing day yesterday, although we've started a little bit on the back foot this morning. Aussie dollar, very commodity based index. We've drawn this head and shoulders formation. It's turned into a slightly more complex formation, but I feel like we can start to take this a little bit more seriously with these sort of levels really sort of playing out nicely. We've got the rally higher, the left shoulder, where you see then the volume pickup goes towards the head, back to the neckline, and back to the right shoulder, and the volume pickup again. So we've saw on the daily chart, Aussie dollar, this shooting star candle, could call it a shooting star formation, although the 11th of May candle really didn't sort of play out. It should have really played out like the 12th of May candle, but still sort of considering that as a similar type of formation to a shooting star formation, which is negative. And really, it's a pending formation. We can't really call this a head and shoulders until we get a break of this neckline. That's at 75.63. So really keeping an eye on that. That's the sort of one that really feels like it is forming a bit of a top, and that'll be interesting moving forward. Moving over, where should we go first? Let's go commodities first. On the commodity side of things, where we've seen the sell-off yesterday, quite an aggressive sell-off, and as you can see, we've got a well, we could almost call it a triple top potential, where price action continues to find resistance around the 66.50 to $67 level in the WTI crude oil. Now, this has led to really sort of like us looking at this neckline formation around about the $63 level. A break of $63 opens up a move to the downside, which should target 60.56. The measured move target is around about $60, and we've got other levels to consider lower than that, but really not worth talking about at the moment. However, this really, for me, has potential to play out in a really nice bearish flag formation. Let's get rid of the extension. And this normally formations like this, where you see the flag form, this channel, this corrective channel, can lead, once it's broken, can lead to an extended measured move target, and again that targets $60 in crude oil. So I'm slightly negative on crude oil if we break $63. If we don't break and close below $63, then there's just as much chance for this to hold on and this supportive area to continue. So $63 really pivot level for me in crude oil. Looking at gold, it had a very spicy day yesterday, very choppy indeed. Let's look at it on the hourly chart. We had, once we saw the stock sell off, we seemed to get the gold move with it. It seemed to clear out a few stops, got below the 1863 level, which was a short-term support, and then we had the reaction higher once the stock indices started to really motor. Also, we saw the cryptos obviously coming off at the same time. This led to a bit of a safe haven rally in gold, which formed a new multi-month high, 1890, 1900, obviously big psychological level. Let's take a look at the bigger levels on the chart. This is the weekly chart, which we've talked about previous, and it's a downward channel formation, which we really are sort of considering this 1873 level as the real break level. So if we can manage, last night we closed around the top of that channel and around the previous resistance level, so really needs to sort of decide whether we're going to go for it or not. For me, gold is really very much a dip buying. Every time we do get dips in there, I do think there's value in buying it for the longer term move higher, and that will coincide with the dollar index or the dollar weakening in my eyes. So that's the long term play. But in the meantime, it's really a question of timing and whether it has the strength and momentum to go. I feel like when we do have this safe haven bet that plays out, it doesn't seem to have as much follow through. So may have to be a little bit patient with gold. Indices, before we get into the real sort of scary markets that happened yesterday in cryptos. So we've got the hanging man candle on the weekly chart. I mentioned these at the start of the week, and we've got the sell-off, which had a bit of a recovery yesterday afternoon. Let's show you exactly what we saw. This is the FTSE, the 4-hour chart. We topped out at 7106, just above 7100, and then we saw a really aggressive sell-off to around about 6900 before we got the bullish outside candle on the 4-hour chart. However, you can see from 6 o'clock onwards to 10 o'clock, this candle shut, we're getting the opposite. So this corrective move higher looks to have stalled. Could we redraw this line, or are we going to wait? I feel like we should wait until we get a good close below it, much like we did back on the 13th of May. And see whether that can be sustained. But for me, everything looks a little bit toppy on the FTSE. DAX, a little bit of the same, a really aggressive sell-off. Again, held this resistance level-ish. 15,515 was the resistance line we had drawn in. Let's turn that red. Oh, that was the actually. That isn't even a resistance line we've drawn in. That was a Fibonacci measuring tool. Really, for me, it's around 15,000. That's the level. We did poke up above it, flushed out a few stops, and stalled at 15,542 before the really aggressive sell-off that we were sort of calling. Now the support below really comes around about 14,800, and again on the 4-hour chart we've had the corrective move higher, this mid sell-off correction, and again it looks like it's potential for another sort of choppy day in indices. It felt like the US came to the rescue yesterday a little bit when we got this reaction higher from the lows. It traded this trend line, upward trending support line really well, just bounced off it. So worked really well. 33,500 was our intraday trade ID yesterday to buy, and it worked out really nicely, hit target. NASDAQ still under pressure with the tech stocks still all over the place, thanks to some nice tweets from Elon. And that obviously leads us into the cryptocurrencies. Let's take a look at those. So Bitcoin, we've been talking about these levels for a long time. We had the ABC target of around about 42,000. It stalled there very briefly yesterday. Sorry, a couple of days ago. This is on the 18th. But was capped around about 46,000. So for us, that is the real resistance level that we believe if prices stay below this move is going to continue. Then we saw this sort of flash crash around about 1 o'clock, between 1 o'clock and 5 o'clock yesterday's 4-hour candle, where we saw prices actually hit the level that everyone's been talking about. Every man and his dog has been talking about this 30,000 level in Bitcoin, and it managed to get there. The reaction higher was just as intense as the sell-off. So follow through price action or buying reached 43,000. So for me, another level of resistance to watch now is this 43,000 level. This overnight we've had another move back down to 35,000 and back up to 40,000. So we've got lower highs in place, although it does feel this bullish hammer on the 4-hour chart could be quite significant. Still a little bit of a way to go to confirm that, but really the bulls need to see breaks above 43,000 and especially 46,000 before we can say with some confidence that that might be a bottom in place. So yeah, that looks like what we've seen on the cryptocurrencies as well. And now we'll take a look at what I'm looking really for a gun to head play today. So this is the part of the show where we really focus on if we had a gun to our head, what would we trade? So it's not the ideal scenario for trading. Really, you want to take your time, be patient, and have no pressure on you. But the gun to the head for me, I'm sort of jumping either between the crude oil. That's my favored one because I do like to go for these big risk reward trade ideas. So I'm looking to short crude oil, have a really tight stop. The stop's going to be at 64. Getting short at 63.50, and I'm going to target a move to 60.50. That will give me a really nice 6-to-1 risk reward. So I'm going to go with that today. Listen, I hope you enjoyed the show. Sorry, it's a bit all over the place without Joe here, but let's hope that it gave you some idea of the technical outlook, really. And I look forward to having another go tomorrow at this all on my own and doing a better job. Thanks for joining me. Cheers.